This is Rod Kusanen, Spooman for Risk. It is March 6th, 2013. All times on the chart are Central Standard Time. And today we're going to review some principles that will enable you to be able to read the premium in a more effective manner and to see how the premium is truly one of the only leading indicators in existence, and it is, once you learn how to read it, one of the most fascinating pieces of information that is available anywhere. We're one of the 2 places in the country that teach how to read the premium. If you don't know how to read the premium, you should learn. So we're going to look at 2 things: the predictive value of the premium and how the premium can forecast setups, pivots that can be easily entered by way of divergence on the premium. We'll discuss all of this in detail as we move along, so let's get started. We are looking at a 20-second bar on both the ES as well as on the $ESINX, which is TradeStation's symbol for the EMINI premium. It is an accurate reading of the premium. We've placed an indicator on the premium so that we can chart highs and lows after a certain number of bars. We've used an arbitrary setting at the moment of 160 bars, and then we reset. But we can do this manually on the fly as frequently as we like. Let's first of all look at certain bars on the premium which are predictive of price activity. Our first bar that we're going to look at is this high. You can easily see that when we have a green dot here, we're tracing higher highs on the premium from a certain starting point 160 bars or so backward. This high on the premium is associated with this high on the Spoos. There's no divergence on this bar, and therefore this bar becomes predictive of one of 2 things. Either the premium will go higher, or the Spoos will go higher, or both. Typically, the Spoos go higher, not the premium, at least not until it returns to that price. We'll look at some examples where that isn't the case, but generally that's how we read it. So when this premium bar hit, even though there was a pullback, we expect that the price will go right back up and in most instances exceed that price at a later point in time. Let's look at some other examples. This low on the premium right here, it isn't lower than these bars, but neither is it a divergent bar on the premium. In other words, this bar, in order for it to be divergent, would have had to be more like that bar just prior to it. The low would have to be way up there. But since that low is much lower than these other bars on the premium that recently preceded it, this bar becomes predictive. That is to say, we expect at some future point that the price of the Spoos will return to 1537.75. Does that occur? Yes, it does. It takes all day long, but it does. All right. Now, we said that that is a predictive bar on the premium so long as there was no lower low on the premium than it was right here. That low, negative 1.93. So we'll just draw a line right here, and you'll see at no time did the premium go lower until we hit that price. That's the power of the premium. Let's look at some additional setup, or additional bars on the premium that are predictive. Okay, this high on the premium indicates we're going higher. Now let's look at this low right here. This corresponds with this low right here. Okay, right there. Okay, those two bars line up. This is telling us that we should see a return to this price unless we get a lower low on the premium later. Does that occur? Yes, right over here. When that occurs, we now have to revise our expectations of what will occur. At this point here, we expected a return to this price, but when the premium dropped below that level, we can only expect that the Spoos will drop lower than the bar with which it is associated. So we can assume that this is going to drop, which very quickly it does, but we cannot assume that it will drop this far. It might, but that's not how we read the premium. Let's look at another example. This high on the premium. That high forecasts a potential return to this price right here, 42.25, or a return to this level on the premium. Does the premium go any higher? Yes, it does. When it does, over here, it only predicts that we will go higher than that bar, which we do in the next couple of bars. Same thing here, right? It goes higher within just a few bars. The predictive power of the premium has been satisfied, and we no longer anticipate a return way back to 42.25. Okay? This bar here on the premium, right? Right here associated with this bar predicts that the Spoos will drop back to this price. But they do right here. Okay. But at the same time, we have a lower low on the premium. So that's predicting we may go even lower. But instead of the Spoos going lower, the premium goes lower at a higher price, only indicating that the premium is forecasting the Spoos will drop lower than they were here, but not necessarily here. Okay? All right, let's look at a couple of other examples on the next day. This low on the premium here, associated with this low here, indicates a return to this price. And as you see, that occurs a little bit later on. However, right before it does drop this low, we get another new low on the premium here. Technically speaking, we can only expect that the Spoos will drop lower than this bar right in here. That bar right there. It does drop lower, but it doesn't immediately drop as low as this. And neither do we expect it to. It might, but we're not going to bank on it. Ultimately, it does. Okay? Let's look at a few other instances. This high associated with this high on the premium, you see how the premium is going higher and higher up till this point, wherein this is what we refer to as like a naked bar where there's no divergence. It's just sticking up there like a sore thumb. And since there is no divergence, this bar becomes predictive of a return to that price unless the premium goes higher. Does it? Predicted a return to that price, and there was no other higher high on the premium. This really works. It happens every day. All you need to do is watch it, have some method of recording it, and use some simple rules to anticipate what's going to happen next. The predictive power of the premium is remarkable. There is nothing else like it in the form of any indicator. But this, keep in mind, is a data feed. It's a data feed. You need to be able to read that feed with some very sound principles. That's what we teach. That's what you pay us for. And you will come out ahead of the game by learning this. No question about it. I guarantee it. This really works. Now, the premium can not only tell you what is going to happen in the future, it can tell you when to take trades. It can give you very clearly defined setups. Let's look at some of these. We'll go back to the beginning of the previous day that we talked about. And that will put us, okay, right in here. All right. Now we've set up one of the indicators to help us to keep track of what's happening with the premium. We have this high, so we already anticipate that the price will return to the high associated with this bar on the premium. But is there anything in the premium that will tell us when to get in? And yes, there is. First of all, look at the lows of the premium. You see how these are dropping? As these are dropping, so should the price on the Spoos. As the premium is dropping, that is to say the lows, the highs of the premium are going up. As the price of the Spoos consolidates right in here, and we get this new high on the premium, here, even here, and even here, we know that we are looking to take a long trade very quickly. So anywhere right in here is going to make us some money. But now watch very, very carefully what I'm about to say. So this bar on the premium associated with this bar on the Spoos. The next bar on the premium is much lower. The next bar is even lower. The next bar is even lower. We should expect the price of the Spoos are going to drop because this is dropping. Not only are we getting lower highs, we're also getting lower lows. But as soon as we get these lower lows, notice what starts to happen again. We get higher lows, all right, and higher highs. So right in here is really where we want to take our trade. We've got higher lows and higher highs. Now, if for some reason we hesitate, look at what's happening to these lows. These lows are going lower until right in here, right? And then ultimately we have that bar. Now, do we consider this to be a divergent bar? And the answer to the question is yes. This would not be divergent if it was lower than the premium right in here. But since it's still higher, we consider it to be divergent, and any long trade in and around this price is going to succeed, particularly because we've got a setup going up as well as a predictive bar on the premium here relative to where we expect the Spoos are going to return. Let's go forward and look at another setup. Now, as we mentioned before, this is a predictive bar. It's indicating at some point in time we should be dropping back to this price. We've already seen that that occurs. But where do we take a short trade? Okay? What we need to see is some kind of setup. Let's first of all look at the highs here. From this bar to this bar, we're going up. We're going higher. We're going higher still. We're not going to take a trade until we exceed the price associated with these bars. As we do, just look at these lows, all right? We're going up, higher highs, but we're also getting lower lows on the premium from this point here. Lower, 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 and even lower still. So now we're ready to, we've waited for the setup to appear. Once we see the setup, now we start reading the premium bar for bar. What do we see happen? Look at the premium, both the highs and the lows. Higher high, higher high, higher high. Higher lows as well. So right here, okay, we now say, all right, if we get a divergent bar on the premium at a higher high on the Spoos, we're ready to take a short trade. That occurs right there. Again, it occurs even right in here. Okay. This high on that exact bar is slightly higher than the previous one, but it is still considerably lower than the price associated with this bar. Okay, that's your highest bar on the premium associated with this bar on the Spoos. A little higher price on the Spoos, but a much lower level on the premium. We've got a big divergence there. Okay? Big divergence. So taking the short trade in here should work. And you had a real nice clear setup to enable you to do that. Spoos come down, but then they go back up one more time. All right? So they didn't come back down to our level, and our level hasn't changed. So we got in, we could have made some money here, but was there anything that indicated that we were going to go back up? Look very closely. We look at these bars on the premium, higher highs, and then we get this bar here. It's associated with this bar on the Spoos. It's not a particularly higher high, but that could be indicating a return to this price. As the Spoos continue to move down, we get a lower low on the premium here. And then down here, we get an equal low. Then we get equal lows on the Spoos, but higher lows on the premium. There's your divergence. This is going back up. Negative 0.77, negative 0.76. This is a higher bar than this. That's why it's painted green. And we go back up. So here we had indication that the Spoos should drop, but here we have indications that the Spoos are going to go back up. We don't know how high. We have nothing here that's making that clear. We just know that it's about to turn. So if we were in the in a short trade at this point in time, we definitely want to tighten our stops, or perhaps get out of the trade. Now what happens next? Spoos begin to rally back. We look at the highs. Higher high, higher high. Right? Now, this bar on the premium, okay, is associated with this high on the Spoos. It's naked. What it's telling us is that we should go higher. Now that we have this information, this is indicating we should go higher. On that basis, we need to be very careful about taking a short trade. It could drop down to our predicted level before it rallies higher. So now we have to be very careful. If we see a reason to take a long trade, we have to be careful that we don't drop below our entry price, or at least not much below it. So let's just suppose that you got anxious and said, oh, this is going higher. So somewhere in here, you go ahead and you enter a long trade. Will the premium help you to know what to do? Yes, it will. You see these lows on the premium? Lower low, lower low, lower low. At this point in time, if you're long, it's clear that the premium is dropping into lower lows. That means that the Spoos should be dropping in their price. So depending, if you got into a long trade here, and this happens on the premium, you better either tighten your stop or jump out of this trade because something's about to give. You entered too soon. Where should you re-enter the trade if you're going long? We know we're going to drop below the price associated here. All right, we drop. Should we look at entering this trade? Possibly. Possibly. Because this bar on the premium here is also confirming that we're going to be going back up. Now, ultimately, that's the bar that we're mostly concerned with. But this little move also is indicating we should be going back up. So now we have to, again, be very careful. And so look at the premium, the highs and the lows very carefully. We come down to this price here, and we're divergent. So let's say we enter here. Is there anything that is giving us a reason for caution? Okay. Now look at the last bar right here. Look at this low right there. We're safe so long as the premium does not drop below that level. Because if it does, and we're talking about negative 1.48, if it drops below 1.48, we have to be very cautious. And that's happening here. That little move indicates a possible drop. But we're safe. It moves back up. But once it moves back up, it gets ready to move right back down. And on the next bar, we drop considerably below 1.48. Now we're in trouble. This could continue to go down, so now we have to be really careful about where our stops are, or perhaps exiting the trade. It drops to this point, Spoos are going to drop lower. It drops to that point. Spoos may go lower. But what happens next is that the lows on the premium are now divergent again. Big divergence on the lows of the premium, right in here. And with the previous information implying that the Spoos should be going back up, that divergence right in here is enough for us to take a trade. So we got out of a trade, let's get back into a trade. Right in there around 1539.25, 1539.5. That'll work. Now watch carefully what's happening here. If this is going to come back to this level, the highs of the premium have to go higher. But instead, what occurs? Let's go ahead and refresh our indicator to about 1032. Okay, just going to go in here, refresh this to 1032. All right, that took us into this low. Let's refresh this again. 1043. This is just so that you can see more clearly what's happening to the premium. Lower low, lower low, lower low, lower low still. What's that telling us? This is all telling us that the price of the Spoos should be getting ready to drop. And we're not getting any new highs on the premium either. Nothing higher than this and nothing higher than that. So while this is dropping, the highs of the premium are not going up, they're dropping. So our long trade here, that long trade is in jeopardy. We'd better tighten our stop, because this is all saying we're going to come down. We do. Watch what happens next. Now we come down to this point, we expect a drop, we get it, and it drops right back to that same low in here. As it does, is there anything that is happening on the premium which will tell us this is about to change direction again? Watch the highs, watch the lows. We're not getting any new lows here, right? Nothing's going any lower. So being that these are higher lows, this may indicate a time to get in right in here. Similarly, though, we want to see higher highs on the Spoos. We want to see higher highs on the premium. We get it here and here. We get it here as well. Now there's very good reason to expect, yeah, this is now giving us a good indication that we should be getting some move upward in the price of the Spoos. So again, we could be looking at jumping into this long trade right in here. If you did, notice what happened though on the premium. Lower low still right there. That indicates this price should drop. And it does right in here. Once it has dropped, then we get this divergence right in here, higher lows on the premium, higher highs on the premium as well. So this became what it really amounts to, our setup. Higher highs on the premium, divergence on the lows, at a lower price on the Spoos. Nice setup. We should now be going back up. Do we? Yes. But as we do, heads up again. Lower low on the premium, lower low again on the premium here. What is that suggesting? This is a naked bar. It's not divergent, it's a lower low. This price will be tested again unless we get a lower low on the premium at a higher price. So we run up there, we hit our mark, but it wasn't without caution, because we have this information all telling us, uh-oh, we could be going back down. So we ride it up, we're safe. We've got a little bit of a divergence here. Fortunately, we go up again right in here, and then right again in here. And then finally we get higher highs once again on the premium here. So now at this point, all right, we do have a higher high on the premium, but it's not real high. We could be going higher, but the rule is either the premium is going higher or the Spoos are going higher, or both. We could be expecting that price to be tested. Okay, we're back. We got a little interrupted there, so let's try to recap here. All right, we had this low on the premium, obviously lower than the previous low here. So this becomes, for us at this moment, a target. Should the market move away from that spot, we expect it to come back unless the premium goes lower. You see that it does over here. Does that change the target? Absolutely. We go lower very quickly and we continue to drop. But we advise, do not expect this to happen. Don't expect that to occur. All right? if you start making those expectations when the premium drops to a lower level at a higher price, you're going to wind up getting yourself into trouble. Now, we have a pivot up here, but this is a bit of a difficult pivot to anticipate. We have these two bars on the premium at this high. So we might say that this is not a good place to execute a short trade for the reason that there is no divergence here. And we say we've always got divergence when the market's ready to pivot. There is divergence, all right, but it is at a level that's just one tick below the high. I mean, look at where the lows are, pardon me, the highs of the premium are right in here. They're much, much lower. So this normally that bar would need to be divergent on the premium in order for us to short that, and it wasn't. So it's a little bit confusing, and we would normally recommend taking a very close look at the situation before jumping in. To your advantage is the fact that the premium drops substantially right before it. So in any case, pardon me for the noise. So in any case, the market shorted and we came down. Now, another point right here. We have this high on the premium. What is that saying? It's saying, in fact, we should be going back up. Okay? We should go and see the market return to that high. But once again, we've got to apply the rule, because later on, what happens here is the premium does go higher. We're at a much lower price. Okay? So you don't know that until it happens. You don't know that. If you were very confused about taking this short, when else might you do so? Let's go over here. All right. We look at that high. This high on the premium is meaningless. There's no indication here that this market is going any higher. But you didn't know that until after it occurred. Is there any kind of a setup? Well, now you've got something to work with right in here. Higher highs on the premium. We expect a little bit more out of the move to the upside. The market flounders, and just look at the highs here. Higher high, higher high. And then she drops, comes back up, and right in here, as you can see, we're at a slightly higher level on the Spoos, but we're much lower on the premium. Okay, just look at this this level in here, right in here. She's really dropping in here. Okay, so for that reason, jumping into this short makes some sense. Okay. Then we get lower lows again on the premium, and we're just about at the end of the day. Okay. Do we see any reason to go long in here? No, not really. Because that low on the premium simply means we should be dropping back to that price. As you see over here, it does. When that happens, we're at another lower low, and then even another lower low here. There's nothing going on here. There's no real move on the premium to the upside at this point, but we are beginning to see that take place on this premium. Here again higher, here again higher, here again higher, here again higher, and then finally we have our divergence right in here. But we have nothing suggesting where we're going to go if we drop. But right in here you can see, once again, a big divergence, slightly higher highs on the Spoos and big divergence. So shorting it right in here looks like that ought to make some sense. It does, but the market doesn't go very far until she runs up again, and you saw that coming. Again, higher highs on the premium, again a higher high here, that's a naked bar, should go a little further. It does. We get up to this point, right? And those three bars, take a close look here, all right? Those three bars on the premium, the first bar is your high, the next bar is an equal high, and the next bar is slightly lower, all right? And you're at this new high here. So taking this down because you've got a little bit of an indication right in here that we may be going down, but there's not much here to work with. It's just divergent here. So this drops us down, and we close out the day. All right, let's move into the following day, and we're going to get rid of the let's get rid of some of these lines so that we can start over. What we're going to do in this video is we're going to insert a threshold line. We talk about this in our classes. There's a threshold level that the premium will drop to for a long trade, or move up or move down to for a short trade. Let me say that again. It'll move up to a certain level on the premium, and this becomes the most likely place where shorts will take place. So we're going to show you briefly how to do this. The threshold levels can be found typically by looking at where the premium is at the most significant pivot. For example, down here we have a nice pivot. We have two equal lows on these bars, and the premium here is extremely divergent right there. Now, is that the level that we would expect the premium to be at the most likely pivot? No. This is way too high. We can see that just because if we were to elect that spot as the level, we're typically not going to drop right into this line. It's going to be much lower than that typically. But at least for the moment, if you were to draw it there, notice what you wind up with. All right, you've got a nice low pivot here, and the market comes down to this point. The lows are much lower than the line, but then right here, strangely enough, right there, all right, on this bar, we're nowhere near it, but on the next bar, we get a nice little move. And over here again, it's happening, but we're not at a lower low at that point in time. You need to measure this right at the low, not near the low, right at the low. So that line is closer to like right here. And then over here, that bar, okay, says it's even a little bit lower. All right. So we have to look at some instances where the market is pivoting to anticipate where that threshold level is. Same is true of the high threshold. Okay. High threshold could very well be right in here. Okay, right about there. Okay, and what we'll normally do is we'll color the line. Tell you what, I'll make this red, make it real clear, and we'll make this green. So we didn't take very long. We're maybe half an hour or so into the trading day where we're measuring our levels. Now, let's see what kind of a setup we've got going here. This low on the premium right in here was, in my estimation, predictive. It was so low. Lower low, lower low, lower low. That's predictive, in my estimation, of the market likely going to come back to this level because it's so low, right? Now, you just need to change this over because we have a different time frame there. Okay, so there you have it. All right, that's a very low bar on the premium. So where would you short this thing in anticipation of a return? You've got higher highs on the premium. Okay, so that's that's indicating that we're going up. And all we have here is divergence. We've just got divergence. We don't really have any kind of a setup per se. The only setup that we've got is down here. We don't have a setup that's close to the top of this move. Nothing's really happening other than divergence. So as the market rises, we finally get to that point where, we're divergent sufficiently enough to expect the market to drop. Okay? Now, as it comes down, is there anything that tells us that this is going to continue to move down? Well, this bar on the premium is lower than these. Okay, so we should see a drop a little bit lower, and we get it right in here. All right, but now we see a divergence right in here. That would suggest this market's going to go back up. All right. However, this is a pretty low bar on the premium. So if you're holding a short trade and you see this occur, you got to be careful due to the fact that the market could turn right around and start heading back up. You don't have anything that's telling you where the market's going to go, not just yet. But look at this bar. Right in here. Let's move this over so we can see it more clearly. That bar on the premium indicates a strong probability of a return to this price. Premium there is at negative 0.04. Now let's just quickly move over here. Here it's even higher. It's at 0.0. So we've got a higher high on the premium here than we do over here. So that revises the expectation, and we can expect that that price right there, 42.25, should get hit again unless the premium goes higher. So we're going to draw a trend line from here to the right just for the point of reference. Now, there was divergence here. We did get a little bit of a move up, but as you can see, it began to drop again. Now, could you have anticipated that? Should you have gotten into a long trade here? You get that nice bar on the premium and you say, voila, we should be going back up. But look at the divergence. This is a little bit hard to read. Look at the highs of the premium here. They're dropping. Highs are dropping. Okay, right in here. Then they start to go back up, but then they start to drop again. So had you been in here, you would have had to be very, very aware of what's happening to the premium here in order to get yourself out of this situation before you get stopped out. And when the premium, okay, let's just look at these bars in here. When the premium started to drop below this level, that's a big heads up. By now, it's already below, and so was your best entry. You got to get out of this. You can't afford to wait for something to turn around. You don't know how low that's going to go. Dump the trade. Now you get to this point. You're at a lower low and an equal low here. That's really not a situation where we want to take a trade. It's not as low as here, that's okay. But there's no divergence here, not really. These are two equal lows. That doesn't forecast anything. So if anything, we just need to sit tight. This is not a time to take a trade. Now that we come up to that point and we see it's a naked bar, well, now we can begin to start thinking about trying to get into a long trade. But where are we going to do that? We should see the market drop below this price because it wasn't divergent here. And it was much lower than our threshold. So we should be seeing a return to this price. While here it's indicating we're going to go higher, the premium is now dropping again. So knowing that the premium is dropping and that price ought to be tested, you could take the risk of a short trade and at least holding it down to here or until the premium says something different. All right. So let's now move forward and examine the facts. We come down to this point here. We look at the premium, all right? Premium is below our threshold level here. We wait for this to drop a little lower. It's still below. Now maybe it's such that we don't want to get in just yet because it's below that line. But we want to keep in mind that line is slightly adjustable. So this may not be such a bad place. But if we hesitated and now we come to this point and the premium is much higher than the threshold level, yeah, now that's a pretty good indication this is going to take off. And if we waited again, look at it over here at these equal lows, much higher than the threshold. So getting in anywhere in here or in here makes really no difference. We should see the market begin to climb. Okay, but what happens? It does begin to climb, that's true. But then what happens to the premium? It starts dropping again. So when we see this happening and we see that there's an indication the market's going to come down, if we're in this trade, we really want to tighten our stop. Is there any reason to get out of the trade? Well, at this point, we've got even a lower low on the premium. That somewhat indicates that we could go lower. So yeah, we've got to really, really keep a tight stop here. Don't lose anything on this trade. There is a little divergence here. That's true. Sometimes that's all that it takes to turn the market. But this lower low here could be spelling that the market is going to go even lower. So if we're in this trade, being very cautious about where that's going to go. And ultimately, as we see it happen here, it does drop. So we get stopped out. We've got nothing happened on this trade. And we're getting lower lows on the Spoos. So if anything, maybe we just want to jump in and take a risk of making a few points or a few ticks on the way down because we don't really have any target per se on this. Lower low here indicates we're still going to drop. What about right in here? Do we have any kind of a setup taking place? All right, let's look. This bar on the premium here, associated with this bar on the Spoos here, I wouldn't call that predictive. Not really, because this bar on the premium is much lower than this bar on the premium, and they're both at equal highs. So that's really a divergent bar. It's not a naked bar. It's divergent. Nothing showing here. There's no setup. And that happens. On the other hand, if we look in here, just look at these highs. Higher high, higher high, higher high still. Okay? And then we even get a little higher high once again there, and even a higher high here. Well, with these highs going on and the lows of the premium getting above the threshold level, perhaps now it would be a good idea to rethink about getting long. So right in here, drops another tick, right in there, add to the position, go long. There is indication that we've got a bit of a setup here to take the market back up. All right. So we're in the long trade again, and the market is cooperating. We're still getting higher highs on the premium. As we do, and we're riding the market here, we look at these lows, lower lows. This situation could be in jeopardy. And then we get this low on the premium. Well, now it's pretty clear if we're in the money here, this is going to drop below that price. Now, maybe that's okay. Maybe we can tolerate that, because if we got in here at somewhere around 38, and we're not that far from it, we don't have a lot of room to move here. This could be indicative of a drop back down to that price. We don't know. So we have to be very cautious. Tighten the stop. Let's move it forward. Fortunately, it does drop, but we're considerably divergent here on that bar. So that means we're safe. Look at these lows. Look at that low here. Okay, much higher here. We're safe. We should be okay on the long trade. And as you can see, we start to really build some steam, and up we go. Uh-oh. We didn't go as high as we thought we would. Okay, look at this high on the premium, and this high, and now we're at higher highs, and we can't even get up to 0.7. We're not even there, not even at 0.7. Okay, this high on the premium, 0.31. Wow, there's nothing here. The highs of the premium are not going high enough. And so instead, what you see is low, 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 low. It's coming back down. As a result, now we have to say, well, we've probably made something on this trade. This is coming down. It's a coin flip as to whether you want to hold the trade or take some profits. Certainly, if you were trading multiple contracts, yeah, I would take some profits here. It could go back up, but this is definitely saying we're coming back down to a degree. We just don't know how much. There's nothing here that's giving us a real clear indication. Notice what actually happens. Okay, we come down to this low here on the premium, much lower than the threshold level. We know it's going to drop further, and it does, but it only drops one more tick. And on that tick, we're basically at that threshold level. Okay, yeah, it's a little bit through it, but keep in mind this threshold level can be adjusted, but there's a big divergence here. So if I got out of the trade, I'd be thinking very seriously about getting back in. because I still have that predictive bar way up here at 42. So I'm long again. Now what happens? All right, we're getting higher highs on the premium, but they're not high enough. There's just, look at these highs here. Here compared to here. There's not a lot of strength to the upside here, unfortunately. And then we get that low on the premium. It should drop a little bit. It does. We're still in this, but we're in it cautiously. And again, if we jumped in here with multiple contracts and we don't see any strength up here, we may want to just ease out of our position a little bit, because this doesn't look good for this long trade. Not yet. But I would hold the trade. Move the stop, maybe take a little off the table. We come back into here, and now we're way above the threshold level, and the lows of the premium are going up at this price. This should go back up. And it does. But here again, the highs of the premium need to be higher. They're going up, it's true, but not as much as I would like to see it. We want to see those premium bars get close to our threshold level, and they're quite a ways from it. Up to here, we're getting close to that target, but that premium has got to spike up much higher than it is now in order for us to go much higher in the rally. Okay. Now we're finally getting closer to where we want to be. Higher high on the premium again here. And we start moving up, and we get another high here. Okay, we should be able to pop this up to 42 based on the fact that the premium is moving higher, getting closer to that threshold level. But what happens? Uh-oh. See what the premium is saying here? We moved up here. That bar is now predictive. We should be going back up to at least 41.50. But then we get these lower lows on the premium again. It drops right into here. Uh-oh, we're going to drop below 39, or drop at least back to 39.25. That's what that bar is saying. So if I'm in this trade, man, I'm really thinking about maybe dumping this whole thing, because it's too late for me to take any profits. We may be going up again, but we could get, we could be going right back down. I only got in this trade just recently, and my, there's not much here for me to work with. I'm afraid it's going to drop below 39.25. That's what the premium says it's going to do, but it also says we're going higher. Well, and we did. We just popped up there. Yeah, this is not looking good because of that low on the premium. If we're long, I'd say dump the trade. We don't have enough money here. We don't have enough room to work with. Look for a better opportunity to get in. So we dump the trade. Oh boy, and look what happens. Market rallies right back up. Uh-oh. Are we going to chase the market? I never chase the market. It's not worth it. We've got too much being predicted here. Okay. That low on the premium says we're going to come back to this level. So really now I've got to ask myself, do I want to wait until we get back up here? Will we get back up here? I've been waiting all day for this to get back up here. It hasn't happened. Now, Let me just move back here for just a second because I want to see if maybe we've missed something here. No. That was the predicted bar. Okay. We haven't gone higher. Okay. So, expect this is going to come down. So, this is one of those situations where you can get anxious. We're getting higher highs on the premium here and here. That says we're going back up, but this also says we're coming back down. And I don't know what's going to happen first. But if I get into a long trade in here, and this comes back down, I'm going to lose. It would be smarter to just sit tight and wait. Because with this bar on the premium saying we're going to come back down to that price, even if we rally up and miss the move up to the upside, we still have the downside to trade. Sit tight. Just be patient. All right. You saw it happen. It went right back up to where we expected it to. We missed the trade. But we have this low to anticipate. That new high on the premium, okay, we've gone through the projected price. And now what do we see happening up here? What we see is a divergence, so I would short that. It's much lower than our threshold level. So I'd look to get into a short right in here and try to write it down to 39. Market starts to move down. This bar here, okay, much higher than this bar here. This is a lower high. There's a divergence here. This is going back up. If I shorted it here, I'd get out of that trade and wait for another opportunity, or really tighten my stop, tighten it to break even. And when we get up here again, I'm getting right back in the trade. If I'm out of it, I'm getting back in. This is divergent. There's a huge diversion. This is much, look at this. Okay, just look at this. That's huge. Here, these bars right in here compared to these bars over here. All right, these are just a little bit higher than they are here, just a little bit. But they're way they're miles from the threshold level. This is coming down. And we can further see that just by looking at these lows. You just have to eyeball it. Lower low still. Lower low again. This is coming down. You short that. See? Okay. So we've gone over several things. We've gone over setups where the premium before the pivot occurs tells you that the market's going to move in a different direction. Then we have divergent, some form of divergence on the premium at the time of the pivot. And in some instances, we also have predictive bars on the premium that will help us to anticipate what price the market is going to return to at least. The premium is a fantastic tool. you learn how to read it, and you be patient. Now in future videos we're going to throw an indicator on this so that you can see how indicators can help you to learn how to read the premium. But you come to us and we'll teach you. We're one of the only places in the entire country, probably the world, that teaches how to read the premium. And we charge a whole lot less than our competitors. So we invite you to ask for a demo. We'll be happy to spend 1, 2, 3 hours with you in a free demo to show you how we do this. It is well worth your time to learn this. So with that in mind, we hope to hear from you. This is Rod Kusin and Spooman for Risk.